Phil C here with you, professional trader and educator here at Star Prosper. I trust everyone had a wonderful weekend and made it as amazing as you are. Now it's time to trade. Going to take a look at some trade ideas that's on the radar, so some setups to go over with you. But before that, I want to take you behind the scenes and show you what I'm currently involved with inside the private client group, then switch over to the Star Trading Overview trades. But first, take a quick moment, a shout out to the new members who've joined, and that's Becky, Zar, Keisha, and Ernest, making a commitment, a decision to finally get the results that you wholeheartedly deserve. I appreciate you, and I'm genuinely excited to see your results soon and what you'll share with everyone in the future STOs. As always, grateful to share time with you, and if I may kindly ask of you, please like the video if you like this style of trading, and if you never want to miss another one of these videos, I'll leave a link below. Throw in your email there, and I'll email it out to you when I've uploaded it. All right, let's go to the charts. Thank you. You will be successful. Right, as promised, just a quick recap here of the Star Live trades that we're currently involved in. Still have a short bias here on the euro dollar, so still looking for a move towards the downside. So one of the trades that we are currently involved in here, again, this is what the private client group sees every single day. This is the Star Live trading room, which I'm about to go live in 15 minutes from now. And we go through a 9-pair portfolio on 3 different time frames, and we trade the plan. That's what we're doing here. So currently short on the euro dollar right now, and it rolled stops, everything's okay. The one that I wanted to go over here, so we rolled stops. This is on the Kiwi dollar 4-hour time frame, and from last week we got a double target winner right here. So patterns pay. I love trading patterns, one of my favorite things to trade. And what you can see is I had stops down here, didn't I? And now what I've done is I've rolled stops to not break even, but I've rolled stops halfway like this. Okay. And one of my rule sets here, as I'm trading in front of everyone, one of my rules with trade management is if we come up 3/4 of the way to target, as we've done here, then, so we use if-then syntax, then I roll stops by half. Okay. So my initial risk gets cut back. So I take back half of that which I initially risked. So that when we do that, we've actually gained money there. Because when you first put on the initial risk, that money that you've outlaid is gone. We accept that. We accept the risk before we put it on. So when you do and you go live, then that money's already gone. Now, if we come into a situation right here where the conditions are met, where we're able to roll stops to break even or by half, then we gain pips back, and we put that back into our account, right? So we've actually gained money. That's the philosophy behind this trade. Now, if we do come up a little bit more, okay, if we do get another leg up, then we'll have a really good profitable trade for about 110 pips, right? So that'd be really, really good trade there. And this one here is a trend continuation trade. I've covered this this strategy over and over in the Star Trading Overview, and that's exactly what we are watching and paying attention inside the live room. And also last week we made a bit of money here with the same setup. Okay, so trend continuation trade towards the upside on Kiwi yen, and we'll see what happens with this one on the Kiwi dollar. Now we'll go jump over to the white charts, which is the STO charts, and we'll take a look at some opportunities there. Now, yeah, what we just covered was the euro dollar and the Kiwi dollar. So let's go back to euro dollar here. Let's go back to euro dollar and we'll zoom in. This is on a daily time frame. Daily time frame here. And what have we been watching throughout the weeks of trading here? Well, we're continuing to move to the downside. So 100 traders out of 100 traders have to agree that we're heading towards the downside. Price action moving from top left all the way down to bottom right. So clearly we have sentiment moving towards the downside. Now, as we do this analysis, and what we're doing in the Star Live trading room is we're jumping down a time frame after we have a directional bias, and we're looking for opportunities within our strategies to get involved, right? And if we are half right with our strategies with a positive risk to reward, then what we are trading is an edge. We have an edge in the markets. So every single time we have a strategy that's set up for us by being patient and waiting for price action to come to us, every time we have the conditions met and we have a trade opportunity, we know that we are half right on that particular strategy. And if we have a positive risk to reward on that strategy, then we have a mathematical proven probability that we gain more than we lose. Reason why I mention that is what you need to be focusing on when it comes to trading. If you want to be a consistently profitable trader, you have to know your numbers. You have to wait for a setup. There has to be no subjectivity. And you need to know your strike rate, your win-loss percentage. And if you gain more than you lose with your risk to reward, do you have a positive risk to reward setup? As what we just covered before, okay? Now, clearly on the euro dollar, we're still bearish, right? We have a new structure low. Now, after a new structure low, the market signals to us. It intends that price action wants to go lower. Now, if we scroll out and we look at our next structure level, where do we come in at? So if we look left, structure leaves clues, right? So where is the next stopping point? Potential stopping point. Doesn't mean we're guaranteed to move all the way down here because we trade with probabilities, right? But if we do, where is price action most likely to go to? Well, if we look left, our next major level of structure is all the way down here, 102. So that's where our next structure level is. The significance of that is we want to look for bearish opportunities towards the downside. So then we go down on a lower time frame and we look for our trend trade setups all the way down until price action tells us otherwise. Now, what does that mean? Until price action proves otherwise. Well, if we get one of these, we're going to move up here. So we're looking for a move towards the downside. Now I'm already live. Okay? That's why I showed you previously. We're already live, so we're looking for a move to retest the low, then potentially lower. But we may get proved otherwise, in a sense that price action may come down, retest this low, okay? So this low down here, and then we may get one of these towards the upside. If we do, where are our stops? Right up here. The significance of a stop placement means we're wrong initially. We're wrong on that initial move, right? So then we're looking for price action to pull back and then potentially retest the next structure level towards the upside. If that happens, we want to get out of this position. Not only that, we wait for price action to come to us and set up the next opportunity because price action told us. That's why we use a stop. It means we want to get out of it and look for that next opportunity. Now, if that happens, again, this is all probabilities, right? If that happens, we're going to move down and then move up. we can look for a W formation. We can look for a pattern trade and look for sells. Okay? We will look for a selling opportunity towards the upside if price action moves up there. But if we get a move towards the downside, then we will hit target on our trend trade. We'll take off half of the position and then we'll roll stops to break even and look for that continued move towards the downside. So it doesn't matter what happens from here, because on our strategies, we're half right with a positive risk to reward profile. We know that we have an edge, and every single time price action sets up, we execute the trade because we know that over time, we gain more than we lose. That means we're trading with an edge. And this is where I want everybody to get to, right? This is where we need to be a consistently profitable trader. You need to know those numbers. You need to have an edge, right? And then it doesn't matter what happens from here. If we move up, we know we're selling. If we move down, we know that we're taking targets, right? That is an emotional liberating feeling, to have that, to trade in that way. So this is what I wanted to cover, and that's what we do every single day, because proof of concept is key. So the trade ideas, the trade opportunity, Kiwi dollar, there we go. The trade idea has changed, right? So this is what I want to cover in this STO. So initially, on the Kiwi dollar daily time frame, initially we were looking to sell right up here, okay? So we came in at a 382 and then we came down, right? And it gave us this W formation. However, that's changed. We don't have a potential bat pattern anymore. When we hit the 382 and the 50%, yes, we do. We have a bat pattern. But what's happened here, we have to get rid of this now, is we have a new B point right here. So we have a new high right up here, followed by a pullback. So it would look like this, okay? So let's do from the top. That's right. So we're not looking, so it'll be around the same area, okay, but it's just a different pattern. I want to make sure that we are consistent, because if we are consistent in our analysis and that which we trade, we have consistent results. And again, that is what we want. That's the secret to being profitable, right? When you're trading. So we're still looking at this area. So no longer a bat pattern here. So let's take a look. So we have our initial impulse leg, swing high to swing low, like this. And now what we're looking for is a new B point retracement. So let's grab our Fibonacci retracement tool and take it from swing high to swing low. And you can see we have a new high right here at the 618. So if we get price action moving all the way up into a 618, that puts us on Gartley pattern alert, right? So we're not looking at the bat anymore. Now we're looking at the Gartley. We need price action to pull back into a 618, but not violate the lows down here, which we don't. Price action comes down, giving us a new low here, but we stay above a previous low right down here. Okay. So now we have condition 1 at the 618. Price action comes down and gives us condition 2. And now what we're looking for is condition 3 at a 127 from our 618. Right? So grab a Fibonacci extension, go from swing low up to the 618 and back down again. Okay? So again, we're looking in that similar region, right? But we want to be consistent with which pattern we are trading. And that's the point of this. Okay? Consistency is key. We're looking for a CD completion all the way up into a 127 right there. Okay? So then the new W formation, the pattern that we're looking at, let's grab the triangle tool, one of my favorite tools here, and go from X to A to B, like this, and then B to C and C to D, all the way up into a 127 right there. Okay, so not much has changed. We're still looking at a CD completion right here. And if we do get there, Stops will be above the swing high, okay? The X point looking left, right there. That's actually the message right now because we're about to go live. The stop will be above the X point looking left, right? And the targets will be in the same place. Fibonacci retracement from swing low all the way up into our 127 right there. So this just gives us a very, very nice risk to reward. We're looking for sells at the 127 and target 1 will be at a 382, okay? And target 2 will be all the way down at a 618 right here. So using the if-then syntax and staying consistent in our analysis and also the execution of all the strategies that we trade, we are going to have consistent results. So if price action moves to the 127, we are going to sell into target 1 and potentially target 2 with stops above the X point right there. And if we do that over and over and over again, and we know that we're half right on this, with this kind of risk to reward profile, like this, so we are over a 1-to-1. So if we're half right on this strategy, with a risk to reward like this, okay, minimum of 1-to-1, then over time, we are going to have consistent results, which will be profitable results. Because again, we are going to gain more by hitting targets than we lose by hitting stops. Right? So this is what you have to do. This is how you become a professional trader. But it is that consistency, consistent analysis, and consistent execution is going to bring you consistent results. And I trust that it's going to be profitable results. That's what I want for you. And that's what I wish for you. All right. So yeah, that's what we're looking at. That's what we're covering. So let's keep an eye on the Kiwi dollar for this week. Again, if you like this style of trading, please like the video for me. It does help me tremendously. And if you want this video emailed to you on a weekly basis, yeah, just hit the link below, throw in your email there, and I'll email this out to you when it's uploaded. And we do this every week. All right. I trust that you find this is valuable. Until next time, be safe, enjoy life, and I'll talk to you soon. All right. Thank you so much.